All right, good morning, trade pros. Welcome to our morning market update for Monday, August 26th of 2019. Hope you guys have had a wonderful weekend with you and your families. The stock market sure has had a volatile period over the weekend. And to end the Friday, boy, what a hectic Friday. All right, if you haven't heard, Donald Trump increased tariffs by 5% to 30 on $250 billion worth of goods and 15 on $300 billion worth of goods. So when he upped the ante, he announced it at 5:02 p.m. when markets were closed. So as of Sunday at 6 p.m. when the futures reopened, there was a huge downswing. And then some recent developments, which we're going to talk about, have caused the market to rally back upwards. We talked about it in our Market Analysis Live webinar. We expected a pullback or a rally. It has happened on decent volume. So we're really here in historic times. And we're going to talk about that today. Okay. First of all, let's start out by saying this. The federal funds futures show a 90% chance of investors expecting the bank to cut at least 2 more times this year. So more than likely in the September and then in the December meeting coming up for the Federal Reserve. So based on these developments, there's a priced in 50 basis point cut till the end of the year, all right, which is up from about 57% a month ago. So recent market and trade war developments have led the market to expect 2 rate cuts to a tune of 90% from 57. So we are getting an increase in dovish expectation or looser monetary policy, which is characterized by lower interest rates and or more stimulus thrown at the market. All right. Futures have rebounded here early on in the week. This is the last week of August. And then we have a Labor Day holiday coming up on Monday. So markets will be closed. We have a reduced week next week ahead of us. Labor Day is a very important day. Most institutional traders send their kids back to school. And then on the Tuesday, they come back in and volatility increases after a summer market that we didn't really get to experience this summer. It was anything but a summer market condition, and we were treated with volatility, which is great for day traders. I've had a really good summer month, July and August, and it continues. There's a lot of volatility. Donald Trump said Chinese officials had called him to say they want to restart trade talks, and he said China wants to make a deal. And he made these comments out of France. He's there, Donald Trump, for the G7 meeting. China says, I don't know what you're talking about. We never made that call, nor had we the intention to make the call. However, Chinese government did not address Trump's comments directly. They said, we haven't made that call. We're not sure what you're referring to. However, Premier Liu He said he wants to resolve the problems through negotiation and cooperation in a calm manner. If you read between the lines, it's basically saying, not like we did on Friday, calm, negotiation-based approach. Donald Trump said China's called them. China's denying that. All right. On the weekend, Donald Trump said that he regretted not escalating tariffs further. Well, here's what happened. He was quoted in a meeting with Boris Johnson saying that, he had second thoughts about the trade war. All right. That's what he said directly. And then the White House immediately backpedaled and said what he regrets is not raising rates more. They kind of were the aggressor in that situation. But we did get to see a side of Donald Trump where he has given it second thought. He said, I second guess everything. That was his immediate response to that. He's like, I'm second guessing the trade war, and caught himself, said, I second guess everything. So interesting tone that comes out of that. During this G7 meetings, there have been a few takeaways, but that's really the biggest one. So in another response, China's Global Times editor, what was his name? Hu Hinjin, I think. Sorry if I butchered it. I'm going to have to take some Mandarin lessons, or Cantonese, both of them. He said China's preparing for a scenario in which China-U.S. trade relations deteriorate even further, even much worse than now. So if you're a trader, what you need to do is separate politics from your trading approach. This is the number one mistake I see traders make that are very politically fueled and motivated. They'll look at their political opinion and they'll try to trade through the lens of their opinion to make money. And that doesn't work. What you have to do is let go of politics. All right. Yes, you might support a certain political agenda, which is great. You should. All right. I believe everyone should support a political agenda and exercise their right to vote. However, when it comes time to directing your money, you should really let go of that bias and look at both sides of the story. A lot of things I've told traders to do over the last couple months, this trade war is, don't only look at Western media of this trade war, read the China People Daily, CPD. You may disagree with China and everything they have to say, but get their take on it because your money is at stake. All right, read the Russian Times. All right, the Russian papers. Read Middle Eastern literature. Read some Al Jazeera network. Get out there and educate yourself on a global perspective, because when you're only listening to Western media, you only get one side of the coin. And your money, whether you like it or not, is not invested on one side of the picture, right? Your money is invested on a global pretense, and that's where you have to be educated as well. So I've really been sending that message to everyone. You could support an agenda, that's great, but money doesn't care about your agenda. Neither do the markets. All the markets care about is safety, all right, and return. That's the only two things it cares about. So take that how you will. That's a message I want to share with you this morning, because on the wake of this downside on Friday, I know a lot of people got caught by surprise. We were in the trading room and we crushed it. We got on that short, we got on long gold, and really took this thing for a ride. So it was a great trading day on Friday, and we even posted the room on YouTube. So if you want to see how we trade, we posted a 30-minute clip for you. During this clip, Victorio made the prediction, or the guess, that S&P would close at the 50 level, and I guessed that it would go down to the 30s. And guess what happened? Both things happened. It hit the 31 point within my level and closed at Victorio's. So I like Victorio better. But I wasn't guessing on the close. I was saying if this thing really gets slippery, downside to the 30. So we're both right. And the question is, did we make money? Yes, I got long gold. All right. On this news, the yuan slumps to historic lows as investors flee the market. All right, Chinese yuan plunged to an 11-year low in offshore trading, and that was 0.9% lower in the session to 7.1448 versus the dollar. All right, they fixed it at a decent number, but the way the Chinese yuan works, they've referenced the rate. It's called the fix. They've dropped the fix in early Asian hour trading, and then the yuan is allowed to appreciate on market forces up 2% or down 2%. So a grand total of a 4% band. And it got right to the low of it overnight and to historic lows. All right. That doesn't help the global economy. A weak yuan is what the United States fears. All right. The United States wants China to strengthen their currency because a weaker yuan gives them an export advantage. However, when you put tariffs on a country and they start losing money, they need to stimulate their economy as well. One of the ways to do it's a weaker currency to stimulate global trade, which in turn gets Donald Trump even more upset, which leads to more tariffs, which leads to Chinese economic deteriorations, which leads to yuan devaluation. All right. In fact, China has been labeled a currency manipulator, but they're not manipulating their currency. Their manipulation ended in 2006. Back then, massive currency manipulator. I'll do the story for you guys one time on YouTube. It's a fascinating story on what China did. All right, but since then, they have been playing fair for the most part, and you're just now getting labeled a currency manipulator. What they're doing is setting the peg, but there's a 2% band on which the currencies are allowed to move. All right, so it is market forces that are guiding the rate. Why is the yuan going down, angering the Trump administration? Because Chinese investors and money in China wants to sell the yuan and go to somewhere safe. All right, if you have exposure to a currency whose economy is going down, you don't want to be in it. You want to get out. Getting out means selling. Selling means lower rates. All right, and that's sort of the pressure that's inevitable. So in fact, for China to achieve a stable yuan that's strong, they will need to manipulate their currency, and they're not doing it at this moment. But with these Chinese economic slowdowns expected to continue, all right, I think the yuan continues to get devalued, giving them an export advantage. I think more tariffs will come. And I got to tell you, I don't see a clean resolution to this. All right. It's going to be tough. I hope there is one because it'll serve the market, but it doesn't look like China and U.S. will ever come to a deal or agreement. If I was China right now, I'm waiting for the election. If I'm Donald Trump, I'm trying to get a good picture or a good deal before the election. So there's those sides of the coin as well, right? Read deeper into these things and don't just gloss the surface, and it'll make a lot more sense to you. All right, in today's markets, Japan's down 2%, huge sell-off in Asian markets. Hong Kong down 2%, China down 1.17%. India's up 2.1%. In Europe at midday, London's closed today. Paris is up 0.5%. Frankfurt's up 0.3%. And that's a good thing because IFO Business Climate Index out of the European zone fell to 94.3 in August, which is the weakest in almost 7 years. All right, so business climate and economic deteriorations are being seen in Europe as well, obviously. All right, it's a globally interconnected marketplace. In the U.S., Dow's up 1.1, S&P's up 1%, Nasdaq's up 1.6. Huge rally overnight to rebound. Crude oil is up 1.2% to 54.82 now, slightly up above its previous day high, opened near the overnight high, now being faded. All right, gold's flat. Gold had one heck of a rally, went up to 1565, opened today's session at 1541 for the pit. We had a huge rally and a huge fade. Bitcoin's up 2.1%. This morning, we're going to see a 10:30 Dallas Fed manufacturing survey. That's a key economic indicator. All right, for today's market, I'll tell you this. It's a really big question what's going to happen. I think on the open, we see a little bit of selling. So the plan is fade early strength, sell early strength, all right, and then buy late morning, early afternoon weakness. I do think we're going to have a little bit more of a rally to squeeze out some short sellers, and then we continue downward. All right, that's what we got for you guys. Enjoy your Monday. I hope you had a great weekend. We're back to work. We're going to get a lot of volatility this week, and be sure that you're listening to some form of news. News events will drive the market this week. All right, you guys take care. Have a good day. Appreciate you all. Send you and your family an abundance of love, joy, and happiness. I'll see you tomorrow. Goodbye, and have an awesome day. Trade pros in the room. Let's get started. I'll let Steven kick it off from Atlanta with our oil update, and then I'll bring it back to myself to talk about the S&P because the oil market's already open. Let's take advantage of that. Boxy, I'm going to host you up. Let's get this going. Trade pros on YouTube. Adios. We'll see you tomorrow. Come join our trading room and see what we do on a daily basis. You're going to love it. See you guys tomorrow. I'm sorry to talk to you with my back turned to you, but it's time to open the trading room. Bye. Thanks, Azales.